like Camarilla pivots. I don't like catching falling knives. I like them when they have taken their support.
True. And you're also a follower of trend. You're a believer in trend following as well.
That is correct. That is correct. I have learned a lot from Ed Seykota. I've spent a lot of time reading his FAQs, and leave alone just the stock markets. Trend following as a concept in your real life works like wonder.
Okay, so now let me actually, put some frame around why we're talking. Your investment return for the last 3 years, 4 years, right?
4 years. 4 years.
Can you just tell us a bit about 1 year, 3 year, inception, whatever numbers you have available?
So my first year was pretty horrible, to be honest. Because when I initially started off reading Warren Buffett, I was lured into buying cash bargains. Turns out they were all value traps. Without a catalyst, cash bargains are just value traps.
True.
And so I learned my lesson and then moved on from there. So last year, 2014, which is an aberration, and I have to add a disclaimer for sure because this doesn't happen all the time.
It doesn't happen all the time.
My return was like 88%.
Great.
In fact, why you should not even consider last year is because one of my friends, Prashant Krish, actually ran a random test, on Excel. There's a feature called random. He basically created 3 portfolios out of random, 10 scripts that basically showed up. And all 3 of them averaged more than 60%. So,
so I think huge number of stocks were up last year. And if you look at the statistics, over half were up about 50%. It was an aberrance, but still, 88% is 88%. And so your average annualized, do you have an average annualized return for the let's say the last 3 years?
So the CAGR basically is 34. I started with around 30 lakh rupees. I'm sitting on around 1 crore 10 lakhs. So that's how the story has been.
Okay.
And separately on my client's account. My client's data is for only last year, which is like I said, no point mentioning that because it's like off the roofs.
No, why don't you mention it?
88%, like I said.
88. Okay, yeah. And I believe you said your AUM is around 3 CR, or is it less than that?
Yeah, I'm managing 3.6 CR now.
3.6. Okay, just wanted to clarify that.
Sure.
Okay, so the one other issue that I want you to just share your thoughts on is gold. Indians love gold, and gold has not been doing well.
Right.
It's I think at a 4.5-year low today.
Right.
Real estate, also loved by Indians,
right.
And then fixed deposits. So
right.
maybe you can help me answer for them why they should invest in your fund as opposed to these 3 options or other options.
Sure. So let's take them one by one. I'll talk about FD, fixed deposits. Fixed deposits is a big fallacy, and reading Warren Buffett has helped me figure that out. I mean, in fact, I was aware of this all along, but when Warren Buffett tells you something, you got to listen. So he basically gave a very nice example, So what is money's worth? How do you judge money? By its purchasing power, right?
Right.
I have 100 rupees. I put it in a FD. It becomes 110. The point is, at the time of putting that money, that $100, I was able to buy 5 burgers for that $100. When I got 110, now I'm not able to buy those 5 burgers because the cost of 5 burgers is $150. So essentially, on paper, you think that your money has multiplied or has increased. It has become 110. For all practical purposes, for the reason of the money, the purchasing power, you've actually gotten poor. The whole idea of investment is to put money in instruments which can run faster than the inflation. If you're not able to run faster than inflation, then you're basically standing on that escalator and running in the opposite direction. You get that Red Queen's effect. And fixed deposits do that.
What's the Red Queen's effect?
Red Queen's effect is like you keep running and you end up at the same place because inflation is running faster than you. So the whole idea of getting rich is to earn quicker than
particularly in a country like India with a high tax structure,
Exactly.
the after-tax returns on FDs are
Ex-
not negative real returns.
Negative real returns.
So
Exactly.
how about gold and how about
Now this
equities
now
versus
now
real estate?
so gold is a very sensitive topic, to be honest. Any married man
And we
can
know
vouch
what
for
Warren
that.
Buffett says about gold, right?
Right. No,
It's
but
not an income-producing asset.
it's not a producing asset. Yes, that's a very logical thing. He basically says if a Martian was looking at Earth, he would be really surprised. What's wrong with these people? They're just chasing this shiny piece of metal for no apparent reason. It doesn't add any value. But it's a sensitive topic, and any married man in India can vouch for that. My wife would not understand this, that it's just a shiny piece of metal. She still wants to possess it.
Right.
So, uh, so as far as investment is concerned, I think it's a stupid idea. You don't want to hoard an asset which is not producing anything. But as an emotional thing, well, you cannot really argue with your wife, can you? Uh,
Yes, we won't go there.
Right. Third is real estate, and real estate, if you look at the 100 years chart of a real estate, when you broaden the horizon, that's when you realize real estate has not beaten inflation. It's just that we are suffering from what is called as recency bias. Last 10 years has seen the euphoric rise in real estate, and that is the reason, and I don't have to go far. My dad, have financially independent through the real estate investments. And so to tell them that real estate would not give you returns, it would not make much sense to them. They will simply shun you off. But
Right.
when you broaden the horizon, see a 100-year chart, you would realize that the growth is the recent effect, the exponential growth.
And even I believe, I don't have the numbers to back me up, but my opinion is that if you take it even going back 20 years, the
Right.
annual growth rate is only about 12 to 14%
True.
compound.
True.
So it's not what we can, we think real estate's delivered phenomenal returns, but over
Exactly.
that longer period of time, it's really not. It's essentially done about the same as, or less than what an Indian equity market return would have been.
Right. Boils down to only one thing. The whole idea is if you want to consistently become wealthy over a period of time, equity is the way to go about it. And trust me, Sunil, I'm not really biased. If it was Japan, I would not have said it because there's no demographic dividend there. In India, with the demographic dividend we are sitting on and the way companies are growing, there is a long road ahead.
So talk a little bit more about that. Was actually my next question is what do you see ahead? And we've got this potential that things may not work out. A lot of people have negative or pessimistic opinion building about the current environment, Modi not delivering, etc.
Right.
How does that affect you as an investment manager, and how will you deliver the returns that you anticipate? Regardless of some of these concerns that are out there.
Right. So Sunil, I'm a skeptic. I'll be very honest. I'm a contrarian and a skeptic. So I would not say a statement like Rakesh Jhunjhunwala that India is a growth story and we will hit 1 lakh Nifty or whatever, and it's a never-ending goal. My point is, because I'm a skeptic, I'll always be an opportunist. And so if it's going down, I'll be shorting it. You getting what I'm saying?
That's where the trend following comes in, right?
Exactly. But while it's up, and I believe it is going up, I would just by being skeptic would not stop me from going long as well, right? So.
It's also got to do with your philosophy, right? Which is that you buy when things have bottomed, and you're looking for value situations, but not falling knives.
Exactly.
But
So I'm basically.
do you also look at growth opportunities, or you're mostly on the value side?
So I end up buying a lot of breakouts as well, but essentially I'll be honest, that is like only 20% of my corpus. Majorly I'm interested in buying where the odds are such that a small good news is going to give a huge impetus and spark.
So values also become a somewhat difficult to, widely used term. So maybe can you define what you consider your value investment?
Sure.